It does affect it. If we did go into a big recession, there would be less demand for almost anything, and that could curtail the silver market. But from a bigger perspective, it's almost self governing. And what I mean by that is 70% of the silver supply comes as a result of base metal mining, 12% comes from gold mining. So if there's a big recession, you're going to see less need for copper, lead, zinc. And because of that, it's going to kind of mitigate it all by itself. In other words, if the mining activity, well, no one, I mean, most thinking people don't want it. China has been the beta test for a very long time. For all practical purposes, the Chinese have been on a digital only cashless society for a very long time. And it worked very, very well. Almost anyone in the cities of China basically use their phone with Tencent or WeChat to make a transaction. And it's all monitored, it's all known, and it works very, very well. So that's basically the system that the globalists want for the new monetary system. And I think that the idea of having a central bank digital currency or a private version of a central bank digital currency is pretty much just around the corner. And in that case, I'm not certain that you'll see it tied to gold, although it could be. My take still is that the initial rollout will be without any tie to anything. In other words, MMT, modern money theory. We know through monetary policy, we could control the value of the money. And there are these digital units, and you get them by universal basic income or you earn them at work. And you'll see how the system moves forward with that idea. If that idea fails, then I think the banks will quickly mitigate that issue and bring gold into the picture and say, okay, we're going to base it on the tokenization of gold, and the new unit is backed by 40% gold or whatever. And of course, that's going to be extremely hard for people like myself to buy into because it's just rhetoric from the political class that I don't trust. But nonetheless, I think it would work on the general population. Well, I gave a lecture over a year ago at the 50th anniversary of the New Orleans Gold Show, and my talk was nothing to do with precious metals, really. It was about the new monetary system. And everything I did during that lecture was factual, taken off the BIS, the Bank of International Settlements website. And going through that and simplifying it to the best of my ability, basically talked about how the new system would be basically a CBDC, and that would be run without gold. And then I said that if you go back in the history of the BIS and you are a member bank, when you report to them, they looked at one thing and one thing only. They looked at how much gold you had. They didn't care how much U.S. treasuries you owned. They cared about how much gold you had. Now, is that still true to this day? I have no idea. But I do know going back 30 years, that's how they did their accounting. So that suggests to me that if the BIS is running the show, and they do, that all participants, which is basically all global banks that were within in the system as it's now run, with a few exceptions in countries that do not belong to this club, will be mandated to do whatever the edict is, which I think will be first time without any tie to gold, with a backup, as I said earlier, that if that doesn't work, we'll put gold into the equation.
Central bank digital currencies are rapidly moving from concept to deployment. Over 120 countries are piloting or developing digital currency programs, many guided by frameworks published by the Bank for International Settlements. Early versions will likely be unbacked, relying on modern monetary theory, money created digitally, distributed through wages or universal basic income, and controlled through policy tools rather than a physical commodity. If this design struggles to gain trust or stability, policymakers may introduce a partial gold backing mechanism. Such a move could soothe public fears, but would raise skepticism among analysts who see it as more political theater than genuine restraint.
I just have to guess, I guess. I really don't know. I think silver is such a maverick compared to gold. I mean, gold is truly an establishment metal, although you won't hear that from many people other than myself and perhaps some of my peer group. But it is the money of last resort. Central banks have still continued to buy it. It's their money as kind of a backup position, as we could keep talking about on the CBDC. It's the money of last resort. It's been money for thousands of years. It will continue to be so. And the banks use it because they know that if all else fails, there's gold. Now, silver used to have that role, but it hasn't basically since the crime of 1873 when silver was demonetized in the United States, although at one time the world was basically on a silver standard. So I think that it doesn't have the punch that gold has. And it's also a very small market. But I did smile, you might have caught it, because of all of those names that are so well known, so well respected, the one that does stand up for silver is none other than Warren Buffett. And we have to recall that Warren Buffett bought 130 million ounces of silver off the COMEX in 1999. And when he declared it on his form for the year for Berkshire Hathaway, the word silver never actually appeared in the report. It was under the miscellaneous category, Michelle, because by law, if anything you have in your portfolio is less than 2% of your holdings, you could list it as a miscellaneous investment. And that's exactly what Berkshire Hathaway did when they bought that. But let's look at the other side of the coin. 130 million ounces of silver purchased off the COMEX put quite a dent in the COMEX silver supply physically in that year. And the owner delivered him about 90 million ounces, and the other 40 million ounces they basically got over time. It spiked the lease rate in silver and it stayed high for quite some time. So even though it was a small amount for Berkshire Hathaway, less than 2%, from the perspective of the physical silver supply, it was quite a punch, as I said earlier, into the COMEX inventory. So silver is a very small market. Probably known as one of the best investors of all time, certainly hates gold but loves silver. Very seldom does anyone ever put the microphone in front of him and say, you know, you badmouth gold very often, Mr. Buffett, but why do you keep buying silver? But I know why he likes silver. But I'll keep that to myself so we can talk about it on our next show. I think it has to do with the supply-demand dynamics are so intriguing that it's such a small market that any one large purchase could certainly disrupt the market. When he bought in 99 and confessed it was him, the price went from $5 to $8 literally overnight. So $3 on a 5, that's a pretty big move. It didn't double, but quite a healthy move. It came right back down into the 5s. But once that announcement was made, you got a $3 move on a $5 price. Again, that's a large percentage gain.
Although the new digital systems appear to abandon precious metals, gold still plays a pivotal backstage role. Historically, the BIS evaluated member banks primarily by the gold they held, not their bond portfolios. That legacy, while less transparent today, hints that gold remains the ultimate settlement asset for institutions even if the public system shifts to purely digital tokens. Central banks continue accumulating gold at the fastest pace in decades. They treat it as insurance for systemic stress, acknowledging that if confidence in digital fiat erodes, a gold-anchored mechanism might become the emergency fallback for stabilizing global finance.
Well, as you know, I've made the statement, and I was very much by conviction, that you cannot manipulate the long-term trend. I mean, when I started on the web in 1999, I said that silver was probably the best long-term investment you can make at that time, knowing full well that what's referred to as spoofing. I mean, they used to call it running the stops. I mean, I've traded futures for a very long time. And it was common practice to run the stops. The brokers know who's got a position on and what their stop level is. And so it's, in my view, I call it pickpocketing. I mean, and that's just part of the way the futures market works. But it doesn't make it right morally, but it does take place. So I just look at it from the larger perspective. You cannot manipulate the gold and silver price indefinitely. And that's true. And so we've seen upward movement in gold and silver that have been rather substantial over the longer term. Not to say there weren't some years or even a decade where we were like kind of treading water or holding your breath and saying, is this market ever going to move again? But it has. We're in the acceleration phase. And I think all the positives that will take place to move the price are there. right in front of us. And I do think, as I said earlier, probably in the last leg up for this market. Graphene, anything in the nanotech world. I've read a few books on nanotechnology, no expert at all. I'm always learning. And yeah, there are conductivities availabilities now on the bench, you'll say, being tested that have a conductivity profile very similar, if not almost identical to silver. And so there could be a technological breakthrough where the price comes down, where it's comparable to what an ounce of silver does electronically. X amount of graphene does the same thing and it costs less, or maybe even the same. And so I never rule those things out. My predecessor made a big mistake in his earlier books on the silver market, claiming $200 silver by like the mid 90s. And based on the data he worked with, he probably would have been right. But there's a big technological change by the time he finished his last book that made the supply demand characteristics change dramatically, where much more supply came into gold and silver that he had not anticipated.
Silver behaves unlike gold, often moving erratically because of its smaller market size and dual industrial investment role. While gold is the establishment's traditional safety net, silver attracts unconventional investors, including surprising figures like Warren Buffett, who once acquired more than 100 million ounces, briefly shaking global supply. Silver's modest market depth means any major purchase can create dramatic price spikes. Still, its volatility also stems from widespread short-term manipulation and aggressive futures market tactics. Over time, however, broader trends overpower interference, and silver continues climbing across long cycles, guided by intensifying industrial demand from electronics, solar energy, and advanced manufacturing.
I think we've already discussed it. From the retail side, where's all this metal coming from? Discouraged holders or people that are finally taking a profit. That's part of it. On the industrial side, I think it's, I'm not inside the boardroom of Samsung or 3M or even a big jeweler like Tiffany's to see what they see. But I think just from anecdotal evidence that we have talked about this whole discussion, there is a demand there that is so strong that it doesn't look like it can be overcome very easily. And the demand is for physical metal in a way that we haven't seen in a very, very long time, perhaps if ever. And because of that momentum, the only real question at this point, if I was on the board of directors, is will it continue or is it temporary? If it's temporary, then you can kind of sweat it out, play your paper games, maybe get the price under control again, take a big sigh of relief and move forward. On the other hand, if it looks like it's systemic and that it's going to continue and that there's going to be, let's say, fight for the last pile of silver to keep you in business, and we see the retail and institutional investment side come in droves, then we could see something that I have anticipated. And this is not a once in a 50-year currency reset. This is like a 1 in 400-year currency crisis that's so well known that it'll be generations before it's forgotten. It does affect it. If we did go into a big recession, there would be less demand for almost anything. And that could curtail the silver market. But from a bigger perspective, it's almost self-governing. And what I mean by that is 70% of the silver supply comes as a result of base metal mining. 12% comes from gold mining. So if there's a big recession, you're going to see less need for copper, lead, zinc. And because of that, it's going to kind of mitigate it all by itself. In other words, if the mining activity slows by 10% and the industrial demand slows by 10%, the mining activity is going to kind of match the need anyway. So I'm really not that concerned about a recession, especially from the aspect that we've been in a deficit for the last 4 years, perhaps 5. And that deficit could go from 200 million ounces down to, let's say, 100 million ounces. But you still be in a deficit. So that part really doesn't worry me that much.
Although silver's industrial importance is soaring, new technologies such as graphene and other nanomaterials are being explored as potential substitutes. These innovations could eventually reduce dependence on silver's conductivity, reshaping long-term demand. Meanwhile, most silver production comes as a byproduct of mining other metals, meaning economic downturns naturally reduce silver supply even as consumption remains strong. Persistent deficits in recent years show physical demand routinely outpacing production. If investment and industrial needs surge simultaneously, the market could face an unprecedented shortage, one capable of triggering extreme price volatility and forcing industries into a scramble for remaining global inventories.
Well, there's a three-word sentence I use all the time, Michelle, and that's all fiat fails. So all recorded history has substantiated the fact that any currency that's unbacked fails at some point. It doesn't mean necessarily it goes to absolute zero, but it does mean it's replaced, either with coming back to a gold standard, or coming back to a bimetallic standard, or reissuing a currency, turning in 10 old notes for one new one, or that type of thing. We've never seen it in an advanced economy like we have in the United States, where basically our debt market is considered to be the sacred situation for all monetary aspects. In other words, the T-bill, T-bond, T-note market is so important and so well trusted that the whole system relies upon it. And yet that's starting to fail now. So the bankers know, anyone that studies, what you and I talk about understands that we're at a mathematical impossibility to be able to pay off the debt. And we're getting to a point where it's going to be more and more difficult to just pay the interest on the debt. And what that requires, it's what it's always required. That means a new system, which means, are we going to move to a CBDC or something similar? And the answer is most likely yes. And the time is short because we are in a situation where the Fed, as I wrote in the last editorial, cannot do anything correct at this point. If they try and lower interest rates and weaken the dollar, which is their motive, it may not work because the market itself will take precedence and say, I don't trust your T-bill or T-bond like I used to. In order for me to be the sucker to hold on to it much longer, you have got to pay me more in interest because I think the debasement of the currency is built into the cake and I need to be compensated. So they could be in a situation where it's already manifest, where they lower interest rates, but the 10-year note doesn't budge. And that's the problem they face. So no matter what they do, they're basically out of control from what they have had in the past. And once that takes place and the market starts to take control, which it has and will continue in my view, then you will see a bigger motivation than ever to reset the system in one way or another.
And how do they reset the system?
Well, that's the debate, isn't it? I mean, is it call in a currency and issue a new one? I doubt it. It will be a move to a digital currency, probably with a lot of political rhetoric, a lot of financial stalwarts coming to, let's say, the propaganda press and letting us know that we need a new system and here's what we're going to do about it. We're going to wipe out the national debt with Bitcoin. It goes away. We're going to restart. Everybody's going to have the ability to transact with their, local token exchange. And all you have to do is get registered at your local post office and away we go. I mean, that's not totally imaginary. I don't know if we'll go exactly like that, Michelle, but it'll be something along those lines. The system really is a digital system right now.
Yeah.
The only thing that's preventing it to go in full force is to dwell into the people's consciousness, the cognitive map, the way they think about money, that the new system is really better. It's better for these reasons. You really want it, and to basically install it. And again, it wouldn't be a really big change as far as the computers running the system. It would be a psychological change. Oh my goodness, we're done with that debt. We are on a new track. We've got a better system, a more convenient system, and away we go.
Every fiat currency in history has eventually failed or required replacement, and today's global system is approaching similar limits. Government debt levels are mathematically unpayable, and central banks are losing their ability to control bond markets. This sets the stage for a financial reset, likely centered on a digital currency infrastructure where transactions are fully traceable and programmable. The shift will be presented as modern, efficient, and liberating, promising debt relief, simplicity, and new digital wallets for all. Yet beneath the marketing lies a deeper transformation, the transition to a financial world where confidence depends not on paper, but on code.